Sweet. Brad, what's going on, brother? Glad to have you on to talk a little bit more about multifamily.
Awesome. One of my favorite topics ever. Let's do it.
Yeah, so the background story is this is kind of similar to the story I shared with Jeremy, is we were in this mastermind pursuing this journey of putting together multifamily deals and just had a connection, right? And
Absolutely. Yeah. The coolest thing about that mastermind was meeting other like-minded people that had a passion to make an impact. And I think that's what kind of drew our group together. I've been fortunate enough to do like smaller multifamily in my past in my own portfolio, but was having like a hard time scaling it the way I wanted to. I was, pretty good at picking up duplexes, tries, and quads, but wasn't able to scale as fast and as quickly and as largely as I wanted to do. And got hooked up with mentors and more mentors and more mentors, which eventually led me to somebody who's like, yeah, I have a way, I have a path for you, and really grabbed onto that. And that's the commercial multifamily and passive investing.
yeah, awesome. So tell everyone a little bit more about your background in your life and in business, basically like where you started and how you got to where you are today.
So I'm an active duty U.S. Navy explosive ordnance disposal officer. So basically, if you've seen the movie The Hurt Locker, the guy that puts on the bomb suit and goes down and diffuses bombs. So I kind of had a background coming from the United States Naval Academy. I was there from '03 to '07, and it was the height of the wars in Iraq and Afghanistan. And the vast majority of the casualties, about 80% of the casualties, were from improvised explosive devices. So I knew I wanted to get into the fight and go do something. It just so happens that the way the military is set up, and especially an awesome opportunity with the VA loan, they set you up to kind of be a real estate investor. They move
Sure.
you every 2 years, and they give you this awesome benefit of being able to buy a home for $0 down. And not only that, when you actually peel apart that VA loan, you find out, oh, you can't just buy just a single family home. You can buy up to 4 units for zero down. You live in one
Crazy.
unit, you learn how to rent the other three out. So I kind of got on that train and started buying these multifamilies with my VA loan, moving, buying more multifamilies. And that's what kind of led me into this direction and this path to do commercial multifamily. But mostly, my business partner, Nate, he was going on a mission trip a couple of years ago, and he was trying to raise $6,000. And when you're trying to raise money, especially for mission trips, people will like nickel and dime you, and hey, here's $50 here, here's $100 there, and he was having a really hard time raising money. I also talked to another missionary friend of mine who was a prior Air Force operator working with Delta, which is the U.S. Army's Tier 1 counterterrorism team. He got hit by shrapnel. His hands didn't work anymore. And so he's trying to figure out what to do with his life. And he was working in a kids' extreme Bible camp where they did all kinds of extreme activities over the summer. And someone approached him to fill a spot to go on a mission trip to Togo in West Africa. It's the second largest or longest family dictatorship in the world under North
Wow.
Korea. And the major religions there are witchcraft and voodoo. So
Crazy.
he went to join and do that, did a discovery, and saw everything that was going on there and how much need there was in that area. He came back and he started fundraising. And for him and his family to go to Togo for 1 year, this impoverished middle of nowhere country, it was going to cost him $100,000 just in
Wow.
insurance and premiums and payments and travel and vaccines and everything else. So he was about 70% of the way through his raise, and he couldn't get the last 30%. So he went out to do like a fasting and prayer, and his phone rang at the end, and a guy picked up and said, hey, I heard about you. I heard about what you're trying to do. I want to help. How much left do you have to raise? And he was like, man, I'm not going to lie. I got about 30% left to raise. And this guy was like, earmark it for me. I want that. And he was like, what? And he was like, earmark it for me. I want that. And the guy was like, that's awesome. That's like $30,000. He's like, no problem. I'm going to bake it into my deal. I'm a real estate investor. And what I do is in my deals, I automatically pull a chunk out of the deal that goes into an endowment, and that endowment pays for charities and people who are doing awesome things and making an impact. And it clicked for me right then and there. That's my why. That's my mechanism for making an impact in the world, is through real estate. And so kind of became my passion then, to see how much passive income I can get to then pass along to people that were making an impact. And hopefully in the future, be able to join teams like that. And that's my personal goal, is to be able to have enough passive income that I can pay for myself, hopefully a future family, and other volunteers that want to go do this kind of work in conflict areas.
Yeah, I love that. I think we talk about that a lot. You know, our investors usually care about three things. They want access, direct ownership of real estate, but in a passive capacity. They want to regularly deploy capital, and then they want the ability to make an impact, right? I mean, syndication, at the end of the day, there's a ton of great syndication businesses out there, but we feel pretty confident that nobody's thinking about it the way that we are, which is carving out a 501(c) and building equity so that we can donate to charities in perpetuity. We all have different passions and things that we care about, whether it's, you know, helping veterans transition from one stage of life to the next, going out and doing mission trips, or one of the things that I'm really passionate about helping athletes make that transition from being an athlete into the normal workforce. Just giving back in that way. And I think a lot of people think about those things separately. Like, when I get to the top, I'll give back. And we're thinking about those things in parallel. What is it specifically? I mean, you could go do anything, right? You could build a business. You could be a stock trader, commodities trader, options trader. Why real estate?
Real estate, you earn money in 4 different ways, which I thought was really awesome. Obviously, cash flow. It's kind of like dividends for stocks, right?
Right.
So that's how we say in real estate, cash flow. You get appreciation on the asset. So over a long-term period, almost all real estate is shown to appreciate in value, just by a longevity of money being put into it. The principal pay down, you have tenants paying down your mortgage for you,
Right.
which is amazing, while you're providing them a wonderful place to live, safe atmosphere, improving the building that they're in, which is outstanding. And what most people don't understand about real estate, as opposed to stocks or REITs especially, is the tax benefits that come
Right.
along from being an actual owner of a hard asset. You get to realize those tax benefits. And when you look at that, a lot of people, and especially a lot of my high net worth investors, they're putting 50% of their paycheck, their hard-earned paycheck of whatever skill they do, doctor, lawyer, surgeon, CEO, they're giving that to the government.
Right.
And there's a quote out there that says, if you're paying too much in taxes, you don't own enough real estate. It's
True
one of the
that.
most optimized asset classes that you can be in per the IRS code. So it was just kind of, again, peeling away that onion and finding out the rules.
Yep.
Almost everybody can win at a game. They just need to know the rules. And most of our investors, they don't know the rules because they're busy being surgeons. They're busy being lawyers. They're
Exactly.
busy doing what they're called to do. They don't have time to learn a whole nother industry. And so what we do for them is we show them that in an easy, very understandable way. And like Einstein said, you're only smart if you can explain it to a 4th grader, right? So we explain it and show them the benefits in a very consumable way, and how real estate is so much more impactful, and has over long-term higher returns in the stock market and lower risk than government bonds.
Okay.
So once I started finding out this information, I don't have to sell to anybody. I'm just excited to spread the good news.
Sure.
So it's been pretty awesome path, and the conversation I'm able to have. People are consistently angry when I first tell them this. They're angry because schools and universities didn't teach them this.
Heck no.
They taught them how to be employees, but they didn't tell them about how to invest and invest smartly. And absolutely in real estate, which is everywhere. I don't care what company you're in, what business you're into real estate, because you either have an office building, you either go to some kind of manufacturing plant, or you
Right.
have a home that you work from. All of those are real estate in some form. So learning the basic understanding of that is going to propel you into generational wealth.
Yeah, 100%. I think the other key benefit there is the 1031 tax exchange exclusion that allows
Oh,
us to trade
absolutely.
up and cascade up. That's another way to just keep propelling your wealth. And that's a video we'll do later. We'll get into great detail on that if you want to learn more. Just stay
Yeah,
tuned.
I didn't want to go into that. That'll give me a whole nother level of excited talking about depreciation, which is the main tax benefit, and then the 1031 exchange. I mean, it makes your mind explode. Where you're like, you could do that, and
Yeah,
you could defer capital gains tax
absolutely.
forever. Like that's an intense thing to learn for the first time, and explaining it to some of these people who are already very, very smart. Seeing that click is very exciting for me.
Yeah, I had a conversation with a dentist the other day. He's an owner in a practice, and he comes from a family of farmers. So he was talking about how he owned a couple farms, and I said, "That's great." I said, "What kind of depreciation do you get on that?" And he's like, "Oh, I don't get any other than if the crop fails and I can make an insurance claim." I said, "Well, you might want to start thinking about putting some actual, housing or some sort of buildings on top of that real estate so that you can depreciate it and take advantage of those tax benefits." And so it's a constant. We're like real estate evangelists, just educating people. I mean, I think the assumption is just because somebody's successful in one given area that they instantly understand taxes, understand investing. I think you and I connected a lot on the fact that we come from similar families where blue collar money was hard to come by. Our parents don't necessarily have a lot of financial salve, and we had to go learn it on our own. And we see them get older and then struggle because they haven't really thought down the road about how they're going to make ends meet, and saving money is not the way to retirement. So how do you deploy capital in a way that's going to consistently create equity growth for you and produce income in your later years? And we think that real estate's, easily one of the best ways to do that. You talked a little bit about the VA loan before, and that was kind of how you got started. Would you talk a little bit about that very first VA loan? I know something you're super passionate about is helping other vets better understand how to leverage their VA and get started in real estate. And I think that was kind of your first step, right? Was leveraging that first
Yeah, the
VA.
first step was somebody told me I needed to buy a house everywhere I moved, and I did for the first time. Well, I didn't. I lived in a sailboat for 5 years, which was not an asset. It was definitely depreciating, and not in a good taxable way. But I finally bought my first house, and I hated it because once I left, when you have a single family home and it's not rented for a month, that whole month you're eating that vacancy. And so then I heard you can kind of get rid of vacancy the more units you had. And then somebody told me you can buy up to 4 units, like a quadplex with the VA loan. And so I started looking at that, and then, they're a lot pricier. And now I'm looking in San Diego at assets that are over $1 million. I'm like, man, that's big money. Like, I'm in my 20s. That's really big money. But then you find out another rule, which is that the rents that are currently in the other units help you apply for the loan. So they take 75% of the current rents and apply it to you getting approved for your loan.
Income,
So
right?
these quadplexes were, the other 3 units were already just by themselves without any of my personal net worth or any of my paychecks going into the equation. They were paying for the asset themselves. So basically, I was moving into a place and living for free. So over the past 7 years, I haven't paid my mortgage. And then all that money I would have put into paying my mortgage, I put into investments and passive investments. And then that passive investment stream lets me live a freer life, lets me have, freedom of choice over the activities I do, the places I go. And now, most importantly, the areas that I want to deliver impact in the world.
I love that. So you talked a little bit about scaling up. Yeah, obviously doing a fourplex, that we would call that. It's still kind of in the residential realm. You can still get a residential loan for that. Once you break into 5, you start getting into the commercial loans. And then, what we focus on is like, 50 plus, 100 plus units, right? So why that size and scale of commercial multifamily? Why not just go build a fourplex portfolio?
So it's not that much harder to buy a 100-unit asset than it is to buy a 4-unit asset. It's just bigger numbers, which
Right.
just means you have to get, in our business, we get more people.
Right.
So think about it. If I wanted to buy, 25 quadplexes to get 100 units, that's 25 different mortgages. That's 25 different insurance policies. That's 25 maybe different property managers. It's a lot of paperwork. It's just a lot of hassle. Or one
Right.
deal. I can get 100 units. I can have a full-time property manager on staff. I can have a full-time maintenance man on staff and on site. I have one insurance policy. I have one mortgage on that. From an economies of scale and economies of time, it makes it so much easier. It's so much less brain trauma on the investor. And then for the passive investor that's coming into our deals, they don't do any of that either. They apply capital and they sit back, do whatever they're passionate about or whatever job they want to do, spend more time with their family, and they walk down to the mailbox, they open it up, and there's a check in there.
Yeah.
And it's a fantastic return, a proven return. And what's cool about those larger units is it sounds scarier and the money's bigger, but they're actually safer.
Right.
So you spread your risk amongst multiple investors. And let's say that there's a minimum investment of $50,000. There's no home really in America where you can go and put $50,000 on something that's nice and get cash flow from it
Right.
without having a serious amount of problems. So our investors will put in, a little bit of money, kind of test the waters, and they start getting this cash return, and they honestly get hooked because there's nothing really out there that provides those kind of returns.
Well, yeah.
On
And why
top
would you
of that,
go ahead?
on top of that, you spread risk amongst multiple tenants. When I was talking about vacancy and I had that single family home and
Right.
it hurt the first time it went 3 months vacant. I mean, it was so painful. I was paying for all that. I was living in another place. I was paying for all that. I was stressing out of my mind. I was, all over the property manager to get somebody in there. And it was just bad timing of the way the last person left. It was in the winter. Then the same in the quads. It was like I would lose one and it wasn't nearly as painful. But, if I lost 3 out of 4, that'd be really painful. You move to 100 units and you have 3 that go vacant at the same time, you still have 97% of your income coming in. So it really actually gives you a lot more safety.
Yeah. And you can withstand a lot of times 20% vacancy, whether economic or physical, and still break even on your BEO on a lot of those. When you stop and you think about $50,000 and you talked about investing that in a single family property, not to mention, there's a lot of work that goes into managing that property, because in current times, if you're not finding a hell of a deal off market, which is harder and harder to come by, you're going to be probably managing it yourself in order to make the numbers make sense. And that's still only driving you a couple $100 a month. It's like,
yeah.
Or
and
you could do the same
I came down
thing.
to Panama City after the Hurricane Michael, Cat 5 hurricane ran through here, destroyed it. Looked like a war zone, worse than any war zone I'd actually been to in Iraq or Afghanistan. And wholesalers were sending me houses and stuff like that. And they were still $70,000. And this thing had no roof. The walls have been flooded, mold everywhere. $70,000.
Sign me up.
After rehab was going to be maybe 200, 230. It was going to take a good 3 to 6 months to try and repair that. Oh, and then good luck trying to find an electrician. Good luck trying to find a plumber. Good luck trying to find a roofer. Like it was next to impossible. And that's a lot of risk because you're throwing that in. You don't know if you're going to get the after rehab value back. You don't know what the economy is really going to do in that small kind of city or town. So another benefit of these larger units is you get buying power. You can go into a bigger market than you're used to. I'm from Hickory, North Carolina, kind of in the middle of nowhere. There's not many larger multiplexes there and multifamily apartments. But if you're looking specifically for 100+ unit places, you can go into Dallas. You can go into Fort Worth. You can go into Atlanta. You can go into Charlotte. You can go into Raleigh, Durham. So you can go into these bigger markets that are safer because they have a much more diverse economic scene. We don't look at any sector that really has more than 20% of the economy. So there's a good mix of government, education, medicine, tech, military bases. Yep. So we're looking at very diverse metropolitan statistical areas, and having that buying power, that group of really savvy investors allows us to go in there and do that.
Yeah. You're not banking on one anchor employer that could knock the whole thing down. I'm in the north side of Colorado, and there's a town just east of me that's Greeley, and it's heavily invested in the oil business. Well, we all know what oil did in the last 6 months, right? So there's been companies dropping left and right, and oil shutting down and moving out of there. So a lot of those, like that economy, and a lot of those people have lost their jobs. Your second biggest risk beyond just the economy and the MSA is your tenant base. And if your tenant base is attached solely to an individual sector of the economy and jobs, man, you are playing a very, very risky game and potentially going to get your head handed to you at some point in time.
Right. It's very risky.
You're preparing for the worst and hoping for the best. So that's one of the beautiful
Exactly.
things about real estate. I say it a lot. This isn't blue ocean technology. We're not forging some unforeseen territory. You can see a lot of the risk factors up front, and then it's just accounting for those things. And that's
Right.
what you move into your underwriting.
And a lot of
Go ahead.
a lot of the, you talking like blue venture, a lot of people love investing in that new stuff because it's catchy, it's shiny. Yeah. Oh, Tesla, we're putting people on Mars, which is good stuff.
Right.
But I'm not going to bank my retirement. I'm not going to bank my kids' future on
Right.
that. I want something in my portfolio that is steady, that I know is going to give me cash flow. What I saw, if Elon Musk goes on Joe Rogan podcast and
Smokes a
he
blunt.
smokes a blunt and you lose 50% of your stock prices, that just doesn't feel good. Like I want to be in something that's solid and stable, gives me safe returns. And then, as I'm being very successful in that and I have some more cash to have fun with and invest in things that are interesting to me, that's when I go and invest. So
100%.
I use my investments for my investments. I don't use my hard-earned cash for those kind of investments, if that makes sense.
Yeah, 100% stable cash producing assets are the key to your, I think about it like a pie, right? And then if you want to do a development project because you have all this stable cash flow over here, it's less risky because you're not putting all your marbles into one basket and potentially completely wiping yourself out. You touched
Right.
on a little bit your investment thesis just about being real risk averse, but I'd love for you to expound on that a little bit on how you think about underwriting, choosing the right asset, the right market, the right submarket. Share a little bit more about your investment philosophy.
Yeah, well, I'll tell you right off the bat, my investment philosophy is not what 99% of other people are, which is show me a good deal.
Right.
That's the last thing I want to see. First thing, I want to see a good market. We talked about a very strong market, very diverse economic sectors, a lot of population growth and a lot of income growth. We want to see markets that are growing and have expanding tech or government, healthcare. We want to see that. If you buy that good deal, the good deal in a market that is not growing, then you're going to see more vacancy. You're gonna see more economic hardships. You're really going to be fighting for every penny of net operating income. So first, my thesis is buying a good market and then buying a good submarket. So we're looking for very good schools. We're looking for very low crime, and we're looking for high employment. So if you have high employment, which is and good income above the national average, you have those schools that are above the state averages, and you have crime that's below the city and below the state average, you kind of find like a good niche to operate in. And then after that, it's the B grade, which we call workforce housing. So on the different levels, A, B, C, and D, A being like the nicest new, all the amenities, it's got gumball machines and slides and ball pit, like whatever.
Lazy Rivers.
And yeah, Lazy Rivers got everything in that. That's a new one. But in times of economic hardship, which we're in now, COVID has forced that now, and people are pinching pennies, or they're tightening their belts, or maybe they got furloughed, or they're not going to get that raise this year. They can't afford to live in those nice new A units, or they don't want, that's where they want to live.
Lifestyle
and so
choice.
in time of recession, they go back to where they can live, which is these B grade workforce houses, which is still safe. It's still close to work centers. It just doesn't cost as much. It's a slightly older asset. And then in the C and D, which are the lower economic zones, that's where you're seeing most of the unemployment, because the tenant base doesn't have high levels of education normally, or as high levels of education. They're further from work centers. They usually have a little bit more deferred maintenance, so there's a lot more work that has to go into it. The crime's usually higher, so you're just not getting a great tenant base. So that's why this very specific sector, the B grade garden style, you got nice dog parks in there, you got a pool, you got usually forested areas, playgrounds, you got a safe place that you'd want to raise a family. Yeah. And for me, that feels good. I don't ever want to be a slumlord. I don't want to be putting on my flak jacket that I went to Afghanistan in to go collect rent. I want to have a place that makes me happy to go to, and that other families come and say, I really love living here.
Yeah, 100%.
And then the returns that we give back to the investors, they're happy as well. So it's kind of like an everybody's happy kind of business. And that's what really drew me to this, as opposed to going to work on Wall Street and just slugging away behind a computer to try and like get some dead dividends and give it to some people who are day trading.
Yeah, yeah, 100%. I mean, you can look at any deal inside of a vacuum and say, "Oh, it looks great. Look at the numbers." Really, you're just modeling a pro forma, so you can tweak those numbers however you ultimately want. And so you hit the nail on the head, is that it ultimately comes down to where that asset is located and the style of asset that you're buying, that ultimately determines your risk. And then behind that, if the numbers make sense, that's a good deal, right?
Right.
If you look at everything in a vacuum, like you could go out there right now and just go onto LoopNet and start looking for apartments that are 100 units below whatever $1 million and probably find something, right? And make the numbers make sense. And then when you zoom out and you actually look at the economy, you realize it's in Detroit, where they've had 200,000 people exit out of that economy in the last 10 years, and where they have some of the worst unemployment and the least net migration of people trying to go there. So it's not a great deal if you're trying to hold on to this thing for 5 to 7 years, because ultimately the location, the 3 to 5 miles in and around that property, is ultimately what's going to dictate your success, right?
Right. And I'm not the smartest guy out there. I mean, at some point in time in my explosive ordnance disposal life, like to solve a problem, I've thrown a rock at it. Right.
Yeah.
I'm not overly savvy. And sometimes the smartest thing to do is follow what other big people are doing. So
Right.
a lot of times when we're looking in those metros, we're looking, hey, where's Starbucks planting places? Where's Target have places? Right. People that have a lot of demographers working for them, and they obviously want to earn a lot of money in those areas. We can see those trends and kind of follow them. So we're really looking at what these other big retailers are that are nice to have around as you're, a growing family, a young white collar family or a seasoned blue collar family that's going to work all the time. You want to have that stuff close by. You want to have those nice amenities there. You want to have movie theaters to take your kids to, that are safe. You want to be able to go to a mall and shop. You want to be able to go get what you need at Target, right, and be pretty close by. So we're not looking at stuff that's just out in the boonies either, that has like great numbers, but nobody really wants to live there because it's hard to get to work. It's hard to get your regular lifestyle stuff. So from a very simple guy, this makes common sense. And as opposed to a lot of other things I looked at that are so difficult to understand, this made common sense. And right. I was able to kind of explain it to a fourth grader.
Yeah, common sense investing. All right, so before we jump into the last question, why would somebody choose, let's say, passive investing over active investing in your eyes?
So like take a hammer and hit yourself in the face. And that's what active investing can be like sometimes. And it's just constant problems and having to deal with constant problems. And some people love that, and they love to have their hands in it, and they love to be constant problems, toilets overflowing and lights going out. And my least favorite is having to be the arbitrator between parking issues at one of my complexes. And so being a passive investor, I learned to just give my money to someone who was way smarter than me, which was great in that area, and let them handle the problems. And the way that this business works is that we have the full-time property managers that are on site and a full-time maintenance guys on site, because you have those economies of scale, those 100 plus units, 70 plus units, 100 plus units, where you can have that. They handle the problems. And guess what? They get paid to handle the problems.
Oh, crazy.
Instead of me having to do it. And so my kind of new rule in life as I was going along and investing, I was like, if it takes me more than 1 hour, I need to pay somebody else to do it.
Yep.
Because it's not really worth my time. Not that I'm an overly valuable person, but I could be doing other things that make an impact with that 1 hour.
With your skills that you have, right?
Yeah, with the skills that I have, and that I love employing, as opposed to like hanging sheetrock. And the 13 years being in combat hasn't, done my body any favors. So my back hurts and my neck hurts, and I don't like getting under sinks and changing plumbing anymore. And there's people called professionals that went to plumbing schools to do that. Wow. And it's kind of what I learned from my military lifestyle. Like, yeah, you can try and defuse that bomb, but there are certain people that know how to defuse that bomb. Let them do that. And, right. And everything's going to be better. So it's kind of letting professionals do what professionals do. And it just helps things go by so much smoother, and it's less of a headache. and it was just safer. Passive investing was safer. And I'd read a book. I read a Warren Buffett book when I was in my teens, and he made a really poignant point that said, I learned to love investing because I was making money when I slept.
Yep.
And passive investing is making money while you sleep, or you're at your kid's soccer game, or you're going to do missionary work, or you're going to volunteer. You're still making money in a passive way. You're not having to sacrifice your kid's soccer tournament because somebody's got a flooded toilet.
Yep.
And I think that was kind of the most important thing for me, is not only economies of scale, but just economies of time and how I wanted to spend my life. Because that's the one thing you can't get any more of is time.
Yep. 100%. I think it just comes down to clearly defining whether you want to be in the business of doing that, or you want to, invest your money into that. At the end of the day, you're just trying to deploy your capital and ultimately multiply that, right? So it has to be deployed in some fashion, right? Saving it's not really the answer. For some reason with real estate, though, we have this tendency to think that like, oh, I can just go buy a rental property and I can do it too. Look at how smart I am. I'm a doctor and I have all this experience. Well, at the end of the day, I'm not jumping up there on the operating table and say, yeah, I can cut this guy open and do heart surgery too. It's a certain skill set. I mean, we've dedicated our life to doing this. We talk about it every single day. We're looking at deals every single day. We're talking to brokers. We've built this team that has, an incredible amount of experience in investing in business and, operational leadership and just managing and operating a business like real estate, the best advisors, right? And so we have decided that this is the business that we want to be in. And so this is where we're going to put our time and energy. But if I wanted to go invest in stocks or Bitcoin, I'm confident. I'm a dang good trader, right? And I could probably do it, but I don't have necessarily all the bandwidth and the time and the energy to go and do that. So I find people who I can resource that stuff out to and deploy capital, right? So I'm not entirely all in real estate, but the bulk load of what I'm doing with my day-to-day activity is in real estate because we just freaking love it. We love putting together a deal, right?
100%. And one other cool thing that I talk to people a lot, people are like, I want to do what you do. And I'm like, awesome, then invest with me.
Right.
That's the best way to learn. You have money invested. You're going to learn the process. You see how the process moves along. You have somebody showing you what to do. And I'm not holding any cards back. You can see all my cards. Like you can see how we do it, because it's only going to help me to have more people in the game that are knowledgeable, and we can share deals. We can share processes. We can share property managers. We can share new software. So it's really helpful to have these people that are like, I want to learn. And then I always ask them, I'm like, okay, do you want to pay to go learn? Do you want to go to a course or go to a college and learn commercial real estate? Or do you want to get paid while you learn?
Right.
And everybody chooses number two. I want to get paid while I learn. And I'm like, yeah, there's a way to do that. So you get in and invest, and you tell the principals, I want to learn as we go through that. And those are really the kind of investors I want anyways. I want people that are smart and they're encouraged by this business and they see the good that can come out of it.
Yep. Yeah, and I think that's a big part of why we're doing these video casts, is to just demystify, like pull back the iron curtain and show people that this stuff isn't overly complex. I think that sometimes the allure of being an active investor is what draws people to it, but the actual business itself, once you get into it, it's not all that exciting to everybody, And so I think you really need to understand whether or not it's a place where you want to spend the next, 20 or 30 years. I've made that decision. So you've made that decision. We love that. And so I think that's a great piece of advice for people. My last question for you is just, what's your biggest power tip? And it can be anything. It can be investing, life, whatever.
Power tip. One, I got three of them. Build a team.
Power tip. Okay.
Build a team. Build a team. That's the same one. It doesn't matter what you're doing. As soon as you go from, I can do this myself, I got to control everything, to I need somebody I can lean on. Even if it's, in that first, single family investment that you do, pull somebody in, just one other person, because they become an accountability partner. They become a brainstormer. They become a helper. They sometimes are the ones that tell you to slow down or speed up. So just having that one other person, and we're lucky. And what a lot of people that ask me, and even my brother, he got married to an Australian, and I was telling him about this investment that we had and this asset that we had coming up. And my new sister-in-law said, okay, Brad, take off your investor hat, put on your brother hat. Tell me why I should invest with you guys. And I said, the strength of the team. They're unbelievable. The people that are assembled in this have so much experience on so many different levels of business, on so many different levels of life. You're not making this investment because of me, make it because of this team. And that's why I'm with them, was because these are guys I trust my life with. These are guys I trust my last, dime with. So that was, and she said, that's what I wanted to hear. And more often than not, the investors that are investing with us aren't investing with the deal. They're not even investing with the idea. They're investing with the actual person, because
Right.
they know our backgrounds. They know that we've been successful in whatever endeavor that we've gone to do. And that's not being prideful. It's just people want to invest based on your history. What have you
100%.
done?
Right.
And for me, it's pretty easy. They're like, what have you done? I'm like, 5 counter-terrorist deployments in the hardest environments possible against the hardest enemies possible.
This feels
Tell me
pretty
something
easy.
I can't do. Yeah.
Yeah, 100%. Cool. Well, how can people get a hold of you, contact with you, follow you, hear what you're up to?
So I always throw this out on a podcast because somebody did it for me when I was listening to podcasts. They put out their phone number, and I love taking investors, whatever stage you're in. How do I get started? Call me. Or you're in the multifamilies, you want to jump to commercial, call me. You're working your butt off on the active stuff. You're tired of it. You want to get more passive, call me. And my number is 828-446-4813. Again, 828-446-4813. Love to have a conversation with you. Or my email is brad@thegrowthvue.com. And that's TheGrowth. Vue is VUE.com. Or you can check out our website at www.thegrowthvue.com and just hit the connect now, and we'll have somebody online with you within minutes and share the good news.
Yeah, sweet. The other thing, ladies, if you are a strong Christian woman and single and you get this phone number, Brad is single and ready to mingle. We'll drop his details down below. Brad, thanks for being on, man. Love you,
Absolutely.
buddy.
Thanks,
And
Samson.
can't
Appreciate
wait
it.
for the next one. See you, man. Peace.